HIMS is up over 130% in the past month alone. And many bulls are out there celebrating on X, but there's something really strange happening beneath the surface with HIMS that I'm noticing every single day. And I want to dive deeper into this observation in this video. I want to cover why the stock is up so much. Is it going to continue running or are we hitting a local top? And where could this potentially end up? I'll share all my thoughts in this video. Let's jump right in. I just came off of a live stream and we were talking about hymns for about an hour, and I wanted to summarize my thoughts in a concise video. I'll be covering news on hymns over the past week, and I'm not here to hold you hostage for the answer. The thing that I'm finding strange is the stock price reaction to news that would typically and otherwise be seen as short term headwinds for the company is being absolutely brushed off every single day because you're seeing double digit positive responses. Most likely, what I believe to be happening under the surface is we're witnessing in real time the beginnings of a short squeeze happening. And I say that cautiously because I understand that that can be a faux pas to call out. But throughout this video, I'll try to provide some examples of what I mean. And just to catch you up to speed on the short interest of HIM stock and why this is so exciting is because on April 30th, the latest short interest numbers came in. And as of April 30th, 2 weeks ago, short interest was 34% of the float, its highest in recorded company history, with an incredible amount of people and institutions betting against this company. Now, the interesting piece here is just 2 days before this short interest number was taken out, they had the Novo Nordisk partnership, which launched the stock from the $25 range, and it's launching it now into the $60 range where it's trading right now. They also reported terrific Q1 numbers, growing triple digits across the board a few days after this latest short interest number. And pretty much every other day, you've had some major news that contributes to the business and the future forecast that we can expect for this business. So I would be shocked if that short interest number is not decreasing. And in fact, I would go out on a limb to say that it's the biggest contributor of the rally that we're seeing. And really, where we go from here, from a short term stock price movement perspective, is going to be a direct representation of what that short interest is in real time. And for those who are still holding on short, keep in mind that the borrowing fees are rising, which is putting even more pressure because in order for people to close their shorts, they have to go out into the market and they have to buy that stock back at whatever price it's trading at. And as that stock price keeps rising, it closed $64 as of today's trading. What this does is it forces shorts to buy it back at a higher price, which is what then causes the short squeeze because you have an increased amount of buying pressure from the longs who are bullish because the news that's coming out is positive. But you also have additional buying pressure from the shorts. And so you have this double buying pressure, which launches the stock upwards. And it's harder and harder for short sellers to essentially close their positions because they have to buy at increasingly higher prices. And so the borrowing fee here, I think, is important as well, because in addition to the stock price running, it's just added pressure that it's putting on the stock. So now let's move away from the stock and let's talk about some specific news on a company level. And I will also include the Trump announcement here too on the macro. But I want to start off by bringing this tweet up on your screen because I think it's the best summary since the last short interest numbers came out on April the 30th, everything that's happened to make it really incredibly clear to you that we're in the middle of a short squeeze. And this is my thought process right now, because this came out on May 8th. On the 28th or the 29th, HIMS announced a long-term partnership with Novo. On the 30th of April was when the short interest came out. And then on May 5th, HIMS reported Q1 earnings. They had triple-digit growth across the board, monster quarter. They also issued 2030 guidance for $6.5 billion of revenue, which is absolutely a sandbag number. Realistically speaking, HIMS is going to do closer to $9 or $10 billion in revenue by 2030. So the 6.5 billion, it sounds exciting right now, but it's totally a sandbag number. But the cool thing is that they actually are forecasting out multi-years. Along with the earnings, they also announced a new chief operating officer who comes from Amazon, who has both experience in Amazon Pharmacy, in PillPack, and also on the logistics side of the business with distribution and scaling. And a few days later, they appointed the chief technology officer who came from Cruise, who is working really closely with AI there. And so you can imagine that this person is going to be there to deepen the data collection from MedMatch and as a result, increase the personalization of HIMS's offerings. And so positive news, positive news, positive news with the backdrop of this massive short interest. A couple days later, they announced a 450 million convertible senior note offering, which they said was to boost global expansion and AI integration in healthcare. And interestingly, here, 24 hours after this was posted, HIMS almost doubled the size of their convertible note offering to 870 million. It's important and relevant because they're raising more money than they initially had planned through senior notes, and they're also doing a capped call transaction similar to what SoFi did last year. But unlike SoFi, HIMS was actually up double digits on that day when they announced that news, even though they're raising money. And in almost all cases that I've seen this being done before, I saw it when Uber did the exact same thing. I saw it when SoFi did the exact same thing. And now HIMS is doing it. In almost all other cases, the stock has traded down because the company, generally speaking, when companies are raising more money, what it means is they're diluting shareholders. They're taking on more debt, and that's not a great thing. And so the stock trades down as a result of that. But in the case of HIMS, the stock traded up double digits, which means that it had a massive amount of buying pressure. People were buying up the stock. And I think in part, that's a pretty clear sign of shorts covering their positions, right? Because the question naturally spawns, what are they going to do with all of this money? I made a tweet today because earlier today, literally 30 minutes ago, the CEO posted and he said that HIMS raised $1 billion, which is the largest raise they've done so far. So you got to think about this. First, they raised 450 million. 24 hours later, they say we're oversubscribed. We're doubling it to 870 million. And right now, a few days later, the CEO comes out and he's saying we're raising $1 billion. The thing you have to keep in mind is that HIMS already has, as of Q1, over $300 million cash on hand. So right now, they have $1.3 billion cash on hand. That's about 10% of their entire market cap. Why do they need so much money? This company is profitable. They're growing triple digits year over year. Why do they need so much money? Which leads me to speculate that there's some type of acquisition that's on the horizon and that's coming soon because HIMS has been buying companies left and right. As recently as 6 months ago, they bought Tribe Labs, they bought the 503B facilities. And I think that aggressive acquisitions and expansion through acquisitions is definitely a part of their strategy. In their note, they mentioned that it's for general corporate purposes, including the acceleration of global expansion of both organic growth and strategic acquisitions, although they have no definitive agreements for any material acquisitions at this time. In that same note, they also mentioned that it's to extend their data pipeline and develop AI tools to continue personalizing treatments to enhance the healthcare experience. This is what their new CTO is going to help them with because he has deep AI experience. So he's going to help them with MedMatch. And here in this announcement, it's vague because they don't want to give anything away, nor do they have an acquisition to announce. But I do think that there's something on the horizon because they're not ruling anything out and they're raising way more money than they actually need to. And one thing I posted on my X was that HIMS is absolutely right now a battleground stock. And what I mean by this is that there are distinct cohorts of strongly held opinions on where this company is going and what this prospects looks like for HIMS going forward. And I mean, you don't have to be a genius to come to that conclusion. You don't have any stock in the market that has a 34% short interest, which is not a battleground stock. And as a result, you're going to have a very volatile up or downward move. And we saw that. We saw this thing go from $19 to $73, back to $25. Now it's back to $65 in a matter of 3 months. Right? HIMS is up over 100% last month alone, 70% in the last week. Now, one of the other contributors from a macro perspective that plays a part in this came on May 11th, just 2 days ago. It was a post by Donald Trump around the pharma space. Now, it's a long tweet, but basically in this tweet, he's talking about how pharma companies and drug companies are ripping people off, and it's very expensive, and they're making a huge markup. And he's essentially issuing an executive order for prescription drug and pharmaceutical prices to be reduced almost immediately by 30% to 80%. He continues in his post to say to compensate for this loss, that drug companies can increase the prices internationally while reducing the prices in America. Now, this is another example of the point that I made earlier, that this is a time when this news should have dragged HIMS downwards because it is short-term negative. HIMS was supposed to fall on the back of this news because one of their entire value propositions as a company and as an offering is that they're more affordable than the competitor. And if by executive order, all the competitors are forced to slash their prices, then what it does is it creates more competition for HIMS. It creates margin compression for HIMS, and it reduces and diminishes their main value proposition of affordability. Over the long term, I think HIMS is sufficiently differentiated through ecosystem benefits and the moat around personalization, and the value prop will win out. So I think that would be fine. But of course, it was something that was supposed to drag the stock down, logically speaking, in the short term. However, it didn't do that. The stock increased again double digits as a result of this news. And I think part of it might have been as a result of Trump on the same day announcing trade talks with China. So the entire market was massively up. But again, it's something that the stock should have been trading down. I mean, you could make an argument that it's bullish because it would be targeted towards branded drugs and not generic drugs. Of course, we would need more details to see what the specifics are to determine how it's going to affect HIMS. Novo, HIMS's partner, would potentially be squeezed on this news. Eli Lilly and all other big pharma companies would be squeezed on this news. And that could potentially be bullish for HIMS, especially if nothing changes with regards to generic drugs. But the point is that in the short term, the first reaction was bearish for HIMS. They were supposed to fall on this news. And what we saw was double-digit percentage increases. Now, I'm not even sure that Donald Trump can actually do price caps through executive order and that they'll stick for a long time. I don't think he even has that power. So, of course, we're going to be waiting for more details because all we have right now is just a tweet. It's a hope and a prayer. We don't have any details around how this is going to work. We don't have any details around how it might affect HIMS because we don't know anything about it other than this tweet that was put out, right? So you could make that argument to say, well, that's actually going to be bullish for HIMS. But in reality, I've seen a lot of investors disagree on whether this is bullish or bearish. And so I don't think it should have been trading for as high as it was. Now, we've seen a similar performance in HIMS in February, where basically it went up super aggressively up to $73, and then it fell by over 50% all the way back down to $25. And the reason why it fell was the FDA decision, which came just 2 days before the Q4 earnings report. And back then, the FDA decision around semaglutide was like this dark cloud, which was hanging over HIMS. And all of that has now been priced in, and yet the stock is now approaching all-time high territory again. It's less than $10 away from their all-time highs. It's one of the best performing stocks in 2025, if not the absolute best one from a returns perspective year to date. Now, of course, from a macro perspective, the market as a whole has been very risk on over the past week as a result of some positive news around international trade and the tariff situation. And as a whole, the market has regained all of the losses that they had since February when the Trump tariffs came on across the board. But you have to keep in mind that even today, earlier, as of this recording, HIMS closed today up 16%, double-digit territory yet again. It's not natural for stocks to go up 70% in a single week, regardless of what that news is. And so my point is there has to be something here beneath the surface which is contributing to this massive volatility which we're seeing. I posted on X saying that HIMS will hit all-time highs in 2025, and then I also a couple of days later said that HIMS is going to break through as a triple-digit stock in 2025, basically putting a price target of $100 on the stock this year. That's almost a double from where we are right now. And I think it's achievable as a result, in part, if we're seeing a massive short squeeze. And this is really the crux of this video. A couple things. First of all, a short squeeze would not be possible if the underlying company prospects were not delivering. So it's because the company is terrific, and it's because Q1 proved that the company is terrific with triple-digit growth rates across the board and amazing prospects as far as 2030 that management guided for. We saw the short squeeze, or we're seeing a short squeeze. The second thing I'll mention is that short interest numbers are not out yet for these 2 weeks. We don't know what the May 15th short interest numbers are, and we're going to find that out probably next week when it comes out. It usually comes out a week delayed. But once we do find that out, the main thing I'll be looking for is I'll be looking to see what the new short interest is. And if in fact that short interest is down from 34% to 24%, then that's fine. We witnessed a short squeeze here, and that's all well and good. But if in fact the short interest is down to like 31% or 30%, and it's not taking as big of a hit, and shorts are not covering their positions, then that's even more fuel for the fire, because if this stock continues to run up, not only will it go to all-time highs, if shorts continue to remain in the stock, then it's going to be way more pain ahead. And I want to end this video on this post because it highlights that if all 60.7 million shares sold short of HIMS were covered at the current price of 52, which is kind of ironic because we're already at 64, and this was only posted yesterday, that the stock could rise by 50 to 150% to $78 to $130, with the potential to rise as much as 300% in an extreme short squeeze scenario, bringing it to over $200 per share. And this is, of course, an AI-generated summary, and I in no way, shape, or form believe that it's going to cross $200 on a short squeeze alone, nor do I think we're going to cross $200 this year, personally. That would be insane to believe. But I do think it's going to be rocky, and it's going to be volatile, and it's going to be upwards and to the right. And I do think we're going to cross $100, or maybe we get close to it, and because it's such a massive psychological level, it gets rejected or trades sideways for a period of time. But I do think we're going to get closer to that level because what is really the biggest bear case for HIMS right now? I don't think anybody can feasibly tell me a strong bear case for HIMS that's stronger than what the FDA decision was for weight loss, especially after this company reported this amazing Q1 results. So I don't know what the stock is going to do. Much of it is going to be dependent on the macro. If we continue to have good news from a macroeconomic tariff perspective, then yes, of course, this can trade upwards. But I also want to acknowledge the observation here that TLDR of this video to me is that we either are already in a short squeeze, which would explain what we're seeing, or we haven't seen the majority of shorts covering their position, which to me would hint that there's a lot more gains to be had and that this can go much higher and that this can be a domino effect whereby it can get very volatile. Of course, none of this is financial advice. Please do your own homework. But, for me, I'm sitting here. I own Leaps on my position. I own shares on my position. HIMS is my third largest position, and it's going to move up to my second largest position if this keeps up very shortly. It's a stock that trades up, 10 to 20% on any given day. And I do think that if we break through that $73 all time high, I'm probably going to start trimming some of my Leaps positions due to that volatility. This was something that I did back in February successfully because I reloaded back in the 30s, and I'll be doing the same. But I do have a core shares position that I'm not going to be touching. But the other thing I'll say is I want you guys to be careful because we're going into a fairly euphoric market with two big green days back to back and the macro seeming to be positive. I want to remind everybody that the macro is still unresolved. And yes, we're seeing positive momentum on the tariffs, but there's a lot still to be done to fully close the book on what these tariffs are going to end up being and how those underlying trade deals actually impact the underlying economy. So do your own homework and please invest at your own pace with risk that you are comfortable taking on. I hope you enjoyed this video. None of it is financial advice. I am very bullish on HIMS and I will eagerly watch to see if this is in fact a short squeeze or if there's much more yet to come. Again, I stand by my prediction, $100 by end of year. I think it's going to happen and we'll see what happens. That's all I can say for now. Thank you so much for watching and I'll see you in the next one.